they're out of the market. And here we are close to 4,000. Help, what do I do? I mean, idiots. You've stacked for a reason. You're getting out of credit. That's the whole thing. It's not gold going up. It's the dollar and all the other fiat currencies going down. And we can now see the path to their complete destruction. That is the key thing. This is not a time to accumulate wealth. It's a time basically to secure what you've got. Traders would have done that perhaps in futures and perhaps also in Shanghai. You still had a backwardation between London and COMEX. Mm-hmm. And if you look at the volumes in the silver contract on COMEX, I mean, it's just gone to a crawl. They're not dealing, basically. So nothing has been resolved. You've still got the problems there.
In a recent discussion, financial strategist Alasdair Macleod emphasized the critical moment the global monetary system is now facing, a period not of growth, but of preservation. As markets flirt with the 4,000 level and traders step back, he explains that the real story isn't about gold or silver soaring in value, but about the steady decline of fiat currencies. Gold isn't rising, he argues. It's the dollar and other fiat currencies collapsing under the weight of excessive debt, inflation, and vanishing confidence. Macleod warns that what we're witnessing is the path toward the complete destruction of fiat money, a process accelerated by global credit deterioration and liquidity strain. The recent stagnation in COMEX silver trading, with volumes crawling to historic lows, signals that the paper markets are seizing up. Despite attempts to stabilize through futures or cross-market arbitrage, backwardation between London and COMEX persists, a red flag that physical demand is overpowering paper price control. This is not, he cautions, a time for chasing returns or speculative profits. Rather, it's the moment to secure and protect what you already have. The shift from credit-based wealth to tangible assets like gold and silver is no longer theoretical. It's the inevitable next phase of a system under stress. If you found this helpful, like, share, and subscribe to the Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on gold, silver, and the markets.
And I think we're looking at March next year, ultimately. But I wouldn't be surprised if it happens before then. When that happens, then basically, I know this sounds a bit panicky. When that happens, basically, you should already be completely out of credit, because the collapse, I think, will be really quite rapid from that point. And they will obviously try and do what they can to stop it and all the rest of it, but it's just going to undermine the purchasing power of the dollar. So in terms of time, I don't think we're far away from the end of the fiat currency system. And the point about being close to the end of the fiat currency system is that we're close to it, fiat currencies not being there. Now, either they're replaced by something else like a new gold-backed currency or whatever, or they tie it to gold. And incidentally, have to take the economic actions to ensure that it sticks. We're nowhere near that. Nowhere near that. I don't know. I just sort of feel that we are actually moving more rapidly than we think towards the end game of fiat currencies. It's, it could be a year, could be 2 years, could be 3 years. I don't know. But just watch. I think the first indication you will get is when the credit bubble pops, you'll then know that the end of the fiat currency system is not going to be terribly far behind. I think there's a big shortfall. So you've got a credibility problem, which is being well aired, and it's well aired even by people like Scott Bessent. Guess what? As soon as he becomes Treasury Secretary and he gets his feet under the desk in the Treasury Department, what happens? He is told, don't say anything about gold. Stumm. Don't talk about it. Why? Well, I can see 2 reasons why. Firstly, they are in denial about gold because they have been promoting the dollar as gold's substitute, if you like. It's a dollar standard around the world. And the second thing is a lot of that gold, I think, went out. It was leased and never came back. You open Fort Knox, I think someone rather cleverly said, you find a whole bunch of IOUs sitting there. We don't know whether this is really true because, of course, we can only surmise. Intellectually and practically, I think it's going to be extremely difficult for the mighty dollar. Earlier this year, we found, much to our amazement, that bullion was being taken out of the Bank of England's vaults and shipped over to COMEX to benefit from the arbitrage, as it were. The arbitrage was the other way. London was below COMEX. COMEX, huge great premium. Why? Because of uncertainty of whether gold will be tariffed or whatever. So But the thing about it is that certainly commercial entities do not store very much gold in the Bank of England. It is mostly, and when I say mostly, not quite entirely, but because we don't really have the true figures, it is other central banks. Now, what will have gone out is leased gold. Now, put yourself in the shoes of a central bank using the facilities of the Bank of England, which until now you felt quite confident because you lease your gold. Basically, it pays for the storage costs, and also you get a bit of a margin on top, which means that you've got this sterile asset which is actually earning you something, which is great. You have the comfort that the Bank of England is going to continue to store that gold over the life of the lease. All that's happening is that there is a book entry transfer system. The bullion's got to remain in a vault, for goodness sake. So it may as well remain in the Bank of England's vault. So as a foreign central bank, you're sitting there quite comfortably. You know, at the end of the lease period, you haven't lost control over the gold. Now, this is very different from the early days when gold was actually taken out of storage and then sold into the market as part of the carry trade, whereby hedge funds and others would go and buy T-bills. I mean, T-bills in those days were yielding as high as 10%, and over the decades fell to something like 5%. And with gold you could lease at 1%. I mean, it was a trade in heaven. It really was.
In a recent discussion, Alasdair Macleod warned that the global financial system may be nearing the final phase of the fiat currency era. He suggests that the collapse could arrive as soon as March next year, or even earlier, with the end unfolding rapidly once the credit bubble bursts. When that happens, he says, there will be little time to react, as the purchasing power of the dollar will erode quickly, and confidence in fiat systems will vanish. Macleod explains that governments will likely attempt to stabilize the situation, but such efforts will only deepen the problem. He believes the world is moving closer to a monetary reset, where fiat currencies could either be replaced by a gold-backed system or forced to tie themselves to gold to restore credibility. He also raises questions about the true state of global gold reserves, pointing to gold leasing practices and the mysterious movements of bullion between London and COMEX. Central banks, he suggests, may have less physical gold than reported, much of it leased and never returned. The cracks in the system are already showing, and when confidence in credit finally breaks, the fiat endgame may begin faster than anyone expects. Let's get into the interview.
A central bank that's been accumulating gold and selling dollars, in most cases, they've probably still got more foreign currencies, more fiat currencies than they have gold.
Mm-hmm.
I think what they're doing is they're trying to protect themselves. This isn't a trade, if you like.
Right.
If you see what I mean. A trade giving them a benefit. So, no, I mean, the whole system it's basically the whole of the fiat currency system is coming to an end, which threatens the very existence of central banks themselves. So I don't see that, they're necessarily happy about this. I mean, there is the geopolitical side of this, of course. China has more or less cornered the physical market. And we now know what China's plans are to protect the yuan. I mean, basically, the SGE is opening vaults in Hong Kong, and also they've already opened in Hong Kong, I understand. They're also opening in Saudi Arabia. And there will be facilities all around the ASEAN nations whereby you can settle trade differences in yuan or gold. And I see today Cambodia has announced, I don't know that this has been verified, has announced that it's prepared to store its gold in Shanghai Gold Exchange vaults. So we can see that as our system here collapses, post-Bretton Woods. I mean, post-Bretton Woods is coming to an end. And the interesting thing is watching Bitcoin, because Bitcoin basically is a tech stock with no assets, no earnings, but just the vibes, if you like. And you can see that it correlates so closely with the Magnificent Seven. Magnificent Seven go up, it goes up. Magnificent Seven goes down, it goes down. So what's it doing now? I mean, Bitcoin basically is threatening to break out on the downside. It's dipped below its 250-day moving average, and I suspect that if it breaks that the $100,000 level, you will see an avalanche of selling. There are an awful lot of people long of long of Bitcoin, who are just in there for profits. I mean, okay, we get from the sailors of this world this sort of wonderful stuff about how it's going to go to the moon and so on and so forth. But, people are in it not because they think it's the new gold. I mean, that's for the fairies. They're in it basically because they want to make money, and they think it's an easy way of making money. You get this at the top of every credit bubble. And what the whole of the crypto market is telling us is just that. We are at the top of the bubble.
As global trust in fiat currencies fades, central banks are quietly shifting strategy, trading paper reserves for physical gold. This isn't speculation, it's survival. The system that has powered global finance since Bretton Woods is reaching its breaking point. Currencies are being debased, and nations are seeking protection in hard assets before the reset fully unfolds. Across Asia, a new gold-based trade framework is emerging. The Shanghai Gold Exchange is expanding its vault network from Hong Kong to Saudi Arabia, even inviting nations like Cambodia to store reserves in its facilities. This move signals a slow but powerful transition, away from dollar dominance and toward a gold-anchored trade settlement system that supports the yuan's long-term stability. Meanwhile, Bitcoin, once hailed as digital gold, is now moving in lockstep with tech stocks, losing its independence and revealing its speculative nature. As it teeters near major support levels, the illusion of crypto as a safe haven begins to fade. The writing is on the wall, the world is preparing for a post-fiat future, and gold is reclaiming its role at the center of real value. The next phase isn't coming. It's already unfolding. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on gold, silver, and the markets.